Good afternoon, everybody. My name is Hiten, and along with I have Sharma, Divyansh, and Lakshdeep, and we'll be doing the organizational analysis after our first meeting that we had a few weeks back. We picked up Research Frontiers as one of our companies, and we'll be doing an organizational analysis of that company. So, for the three streams that we chose from startup, scale up, and turnaround, as discussed with our CEO, our professor, we chose this company, Research Frontiers, as a scale up acquisition opportunity for our company, PMF Holdings. So, before we begin, I want to anchor this discussion around one very important fact. According to the company's recent filings, Research Frontiers has about 6 total employees as of early 2025. That kind of changes how we think about this acquisition. We are not buying a manufacturing company. We are not buying a 200-person operating business. We are evaluating whether PMF can take a small intellectual property licensing platform and turn it into a structured, scalable ecosystem business. So today, we will walk through their business model, how they actually make money, their organizational structure and governance, their leadership depth and readiness, their operational bottlenecks, and cultural and integration risk. And at the end, we'll clearly state whether this company is truly ready to scale under PMF or not. So, Sharma, can you start us off by explaining what this company, Research Frontiers, actually is?
Thank you, Tim. So let's simplify this, like what Frontier does and how it's a licensing model. So Research Frontiers, firstly, they do not manufacture any smart glasses. They license a patent light controlling technology called SPD to other companies. Those licenses then manufacture the films, integrate it into glasses, and sell finished products like automotive sunroofs and architectural smart windows. So Research Frontiers earn money through royalties and licensing fees. That means their business model depends heavily on partnerships. Now let's walk through the business model canvas on a really plain terms. So I'll be targeting customers, value propositions, revenue dependence, and supply concentration, and the strategic conclusions for the business model. So starting with the customers. So the end market for them is automotive manufacturers, aerospace companies, architecture and building developers, marine applications, and display technologies. However, if PMF is seriously about scaling, we cannot focus on 5 markets at once. So we heavily recommend concentrating on automotive integrations and architectural's retrofit markets. Those 2 markets offer repeated volume and create revenue predictability. Now, these are the main focused customers that PMF funding could focus on, apart from going for a big market like 5 markets. So these are 2 listed markets. Now, value proposition for PMF would be the real core value is really simple. The technology just allows glass to change tint instantly by applying the voltage.
Okay. I want to interrupt a little bit. You mentioned something called SPD Smart Glass.
Yeah.
I was looking that up. It's called Suspended Particle Device Smart Glass.
Exactly.
It sounds a very unique, a niche kind of technology.
Yeah.
And that's where you connect the value proposition for it.
Exactly.
Yeah. So you're saying the glass tint changes. Could you say that line again?
Yeah. So this technology allows the glass to change the tint instantly after applying the voltage. Okay. So once the voltage is provided to the glass, the particles within it changes the glass into a tinted one.
Okay.
This reduces glare, heat, and improve energy efficiency as well. Okay. But there's an important insight. Right now, this is viewed as an innovative technology. But what PMF must reposition it as certified, reliable, specification ready system.
Okay.
That shifts organizational, not technological. Now let's focus on the main part, revenue, where the revenue depends for this company. The company's own filing shows that the revenue is concentrated among small number of licenses. That means if one of the partner underperforms, the revenue drops.
Okay.
So they also state clearly that they cannot control whether the licensing successfully commercialize the products or not. So that's the biggest structural risk right now the company is facing. Let's talk about how the supply concentration affects this model. Another important disclosure in their filing, which was found, was there are only 2 current commercial supplies for SPD films.
Okay.
One is Shoda Denko and the other one is Gozi. If supply demand is disrupted, the production stalls. As we all know, for a production, supply is really important for the raw materials in order to complete the final product.
Yeah.
So if the supply is disrupted, the product is stalled. So scaling demand without strengthening supply would be dangerous for PMF. So they really need to focus on the supply concentrations.
Okay.
Now, what could be a proper conclusion for this model? The strategic conclusion would be the strongest part of the business model is their intellectual property portfolio and licensing structure. The weakest part in this is partner dependence and supply concentrations. Like if they are depending, as I already mentioned, if they're depending on the partners as they are just license providers, not the sellers. So if the partner doesn't perform well, the revenue drops.
Okay.
And the other means, like if the supply is concentrated and it gets disrupted by any means, if the supply is not up to the date, it's not fulfilling the factories and the licensing. So what happens? The model for this canvas doesn't work as we want it to. Scaling this company means building a partner performing system, not building factories. Then this is where governance become critical.
Okay.
And by meaning governance, how the structure would be. So Divyansh, can you explain exactly how it looks like?
Yeah, sure. Thank you, Sharma. Let's talk about the structure. There are 6 employees means, which is very lean, very centralized, and the heavy dependence on the chief executive officer.
The CEO.
Yeah, the CEO.
Yeah.
That works when you are protecting intellectual property. It does not work when you are trying to scale globally. Now the governance. The board structure is classified, meaning directors serve staggered terms that makes the hostile takeovers difficult. So PMF would need to pursue a friendly acquisition. More importantly, the governance appears structured for a small company, not for a scaling company.
Okay.
There is a limited formal infrastructure around a commercialization oversight. That's not a criticism, it's simply a size reality. Now moving to the openness to outside capital.
Yeah.
Let's address an important question. Would they even accept outside investors?
Correct. Yeah, that would be one of the questions. It's an old company from 1960s.
Yeah.
It has 6 people in it,
Mhm.
and I would question this. Like, you're running this company for so long. Do you want people from outside to invest in you? I think they want to be very close and do things by themselves. So that's a very good question you're asking.
Yeah. On February 18, 2026, from 8K filing shows they entered into a subscription agreements with private investors.
Okay.
They raised approximately about like $1.1 million by issuing shares and warrants.
Yeah, and we were going through the forms. I think 8K form is the current report. So
Yeah.
we were going through the current report.
That's the recent report.
Okay. Yeah.
Like some investors included family members of a director, the owner of one of their licenses. This tells us 2 things. The company is open to external capital. They are comfortable structuring financing agreements. that increases the feasibility of acquisition. Let's move to the structural gap. There is no dedicated like a chief revenue officer, a partner performance manager, or a supply chain oversight executive. If PMF acquires this company, those roles must be installed immediately.
Okay.
Now, Lakshdeep, can you walk us through what that hiring roadmap look like?
Yes, absolutely. Scaling this company is about building structure around our existing intellectual property, and there are like 3 phases in it. Phase 1 is like first 90 days, and in first 90 days we would hire a head of partnership and who will manage partners and evaluate their performance, and a vice president of finance which will forecast cash flow, manage risk, and plan for supply disruption. And this phase is about control and financial stabilities. And the second phase is in between like 6 to 9 months, and we would hire a quality and certification leader to make sure partner product meets the performance standards. And next is a partner program manager who will track commercialization progress and milestones. And this phase is about standardizing the operations. And in phase 3 is around within like 12 to 18 months, and in which we will build a small technical enablement team which will focus on integration support and product readiness. And this phase is about technical scalability, and we are not hiring 50 people, and we are not building a scalable framework.
Okay. Let me just recap what you said. So Divyansh basically says that under PMF, we are going to make a hiring roadmap,
Yes.
and you divide it into 3 phases.
Yes.
Starting from 3 months, then 6 to 9 months, and then 1 year to 1.5 years.
Yes.
How it would look like. So, like, if we start hiring people within a company who, I don't know, maybe wants more people or not, and we are planning to scale them, would there be some key performance indicators in these?
Yes. There will be some key performance indicator, and we would track like reduction in revenue concentration and number of partner passing quarterly performance reviews, and redundancy in film supplies, and conversion rate from pilot to full production.
Okay.
And this is how PMF creates control over partner-driven model.
Excellent. Thanks, Lakshdeep. Would there be any operational risk and any specific scaling condition? I think I'll ask Sharma about this. Would you be able to tell us on that?
Yeah, so talking about the operational risk and scaling conditions, let's be very clear. The biggest operational risk is supply concentration, as we already talked about this. The company disclosed reliance on 2 commercial SPD film suppliers, just 2 in the industry. If PMF increases demands without securing a supply agreement, we increase the risk instead of enterprising the value.
Okay.
So we take those demands, increase the demands for the company, and eventually if we don't have a supplier agreement, that we are so sure that we give the supplies in order to produce the products. So we will obviously increase the risk instead of enterprising the values. So scaling must follow a sequence.
Okay.
There should be a sequence in the scaling, validate performance, secure supply stability, and then expand commercialization and standardize the certifications. This is in my point of view, this is a discipline scaling, because going in these orders, we will be justify our performance and we will be justifying our form of working. Like if we gonna take more and bigger contracts and bigger deals, and we get to that demand point, so we are sure within the company that we have the supply to back the demand up.
Thanks for that. I'll pick a topic of culture and what kind of risk we might face when integrating with them. So the company we know is lean. It's very lean. It is very IP, intellectual property focused. It is very relationship driven, and it is legally disciplined. So the integration risk is not about systems, because there aren't many systems. The risk is disrupting partner trust. So would they trust us if we acquire them and then try to scale them? So what PMF should take, what we would call it a light touch integration approach. What we do is we preserve a few things and then we install a few things. We preserve partner relationships, we preserve brand credibility, we preserve technical leadership. But what we do is we install governance cadence, we install performance accountability, we install financial controls, and we install supply resilience planning. So based on the discussions that I had with Sharma, Divyansh and Lakshdeep, like we have some final recommendations. So if PMF acquires Research Frontiers, it must commit to building the operating system around it. Without governance upgrades and partner performance discipline, scaling increases volatility. And with those structures in place, this company transitions from a small IP property licensor to structured scalable ecosystem platform. And like that's our final recommendation. So with that, we say thank you so much.
And we are happy to take any questions.
We are happy to take questions.
Yeah.